Hey, what's going on, friend? Juan Pablo here. Today's topic is this. Can I use hard money for multifamily properties? Great question. You may be curious about that. You're interested in getting an income producing asset, right? Using little to none of your own money. That's what 100% finance is as a definition. So what's hard money? Hard money is a financial instrument in which a private lender will lend you money to acquire the beat up asset as well as to fix it up, as long as you buy it right. And here's the formula. Typically, the ARV, the after repair value, is a term in which how much will the property be worth after it's fixed up and pretty. So the purchase price plus repairs have to be equal to 70% of the ARV. Now it changes depending on the market. If you're in a buyer's market, I like to use 65% of the ARV. But if it's a seller's market, I might go up to 75%, meaning purchase price plus repairs must equal to 65% ARV in the buyer's market, or purchase price plus repairs must equal 70 to 75% of the ARV in the seller's market. So with hard money, it's the private lenders lending you the money to buy and fix it up. Sometimes they may require different terms, such as a down payment for the purchase price, or a small down payment for repairs, or they may give you 100% of the financing. Now, if you do have to come up with a down payment, you can always use business credit to offset those costs. And we provide hard money as well as business credit at 100percentfinance.com. But at the end of the day, you can use hard money as a creative financing strategy to acquire distressed rental properties. Now, let's get to the topic. Distressed rental properties. Well, what about if I came across a 7-unit Juan Pablo, in which is 100% vacant, owned by the bank, a foreclosed property, REO? Can I use hard money for that? Well, some hard money lenders will not do it. They like to stick to single family properties because they know it's easier to fix it up, and you can exercise 2 extra strategies. Fix and rent it out through a cash out refinance, or fix and flip, sell it to a home buyer. Well, multifamily, you don't typically do fix and flip that much. You might hold it for a while and then flip it years down the line. So there are a few specific hard money lenders that will do it, such as the hard money that we provide at 100percentfinance.com. We'll give you very aggressive, competitive interest rates, 8.5%. Don't quote me, okay? It varies based upon the deal, the market you're in, and your creditworthiness as a borrower, but typically we lend around 8.5%. Points can be about 2 to 4 points, it varies. But the beauty about our hard money is that we finance hard money for 1 to 20 units. So yes, you can use hard money for a multi-family property. In fact, I'm entertaining a 7-unit as we speak that's owned by the bank. Right? That just wasn't a fictitious property. I'm entertaining it right now with the real estate agent. It's bank owned. Everything is pretty much vacant. It just needs some repairs, but it could be a great value add. And this is the crazy part. It is a 7-unit that I'm negotiating with the bank. We just have to do a lot of back and forth for $70,000. That's $10,000 a door. And I know because I have a property, I have a 5-unit in the same area, in the same market, in which I know I can receive around $500 to $550 per month in rent. So let's say 500 to make the math easy, times 7 units, that's $3,500 a month in rent. And the repairs, it's just cosmetic. There's a lot of deals out there. These are called value plays. There's a difference between a yield play and a value play. A yield play is what I recommend for newbie investors, especially those who are buying properties out of state, which we provide. We have a program, if you apply, in which we help you acquire multifamily properties out of state, but we use yield plays in that scenario. Buy and hold, meaning you're buying a multifamily property. It could be a 9-unit for you, a 10-unit, or a 5-unit. We even found 5 units for students for $100,000. But you buy the property, you hold on to it, and it's fully occupied. You're yielding cash flow, yield play. You're yielding cash flow day 1 of closing. Now, value play, that's for the more astute investor. The investor says, you know what? I know how to do rehabs. I know how to manage a team. And I'm willing to spend a few months getting the property fixed up and incur holding costs, meaning you do have to pay some costs as you hold the property, like the hard money minimum payment. And with hard money, only thing you pay during the holding cost period is just the interest. That's it. Interest only payments, which is easy to afford. And you might have to pay for other holding costs, such as keeping the lights on, the water bill for the water for the contractors to fix the property. But it's small. But you can definitely entertain value plays, because you have to have value in order to cash out. if you're more of an astute investor. So for our hard money program, we provide it for that person who does have the credibility, the 3 C's. One is the credibility, meaning they've closed on the property within the past 24 months. That's why our interest rates are much lower. And you can check us out. And you can fact check us and compare us against other people. I'm sure you may know, those people who are familiar with hard money, interest rates are typically in the double digits. 12%, 15%, not 8.5, right? And 4 points, not 2 points. So with us, we're able to extend those great terms for the person who's at least closed on one deal within the past 24 months. So if it's you and you're looking to use our hard money, not just for single family, but for multifamily, we highly recommend for you to apply at the link below. The second C, outside of credibility, is cash. You gotta have some liquidity. Now it can vary, but you gotta have some liquidity, just proving your success in doing real estate dealings. The third C is credit, at least a 680 FICO score. So if you fit the 3 C's, and you're interested in doing some hard money deals for single family up to 20 units, we can definitely be a resource for you at 100percentfinance.com. So I highly recommend for you to apply, check us out, or check out the competition, see which one is the most competitive, and just take some action. This year should be the year you close on your first deal or your next deal. Make sure you're actively closing deals at least 2 a year, so that way you can be financially free independent. All right guys, I'm Juan Pablo. I appreciate your time. Continue to like, share, and subscribe. And as always, this is to your success. Take care. Peace.